quiet over there, so do you mind if I pick your brain a little bit?
Oh, please go ahead.
Okay, well, I know that you have kind of an interesting background. You actually have a bachelor's in aeronautical engineering, and yet still, you graduated from the University of San Diego School of Law, so I would like to know how that happened. That sounds kind of interesting.
Well, I was serving in Vietnam in the Mekong Delta with terrible living conditions out at an advanced tactical support base. And a communique came through indicating that if you wanted to take the law school admission test, you would get 5 days of leave in Saigon. And so I had no other intention to take that test, but I wanted a clean bed and hot food for 5 days, and so I signed up. Mm-hmm. And strangely enough, I got a good score on the test, and so therefore I applied to law schools, and that's how it all came to pass.
Well, so how was it 5 days? That's what I'm more concerned about.
Well, I mean, no one shot at me in Saigon, so it was great.
Okay, well, thank you for your service, both of you, actually. Both you and Pearl, thank you. So, okay, so you've obviously been in law for quite a while now, but you have a specialty, which is very unique. So, you want to tell us about that?
Yeah, I represent individuals and businesses in dealing with tax balances that they are unable to manage, and with people who, for some reason, have procrastinated in terms of dealing with the issue rather than taking the bull by the horns. And so the vast majority of people who come to see me have been the victim of a bank levy, or they've gotten some sort of nasty collection notice, or their wages are about to be levied or have been levied. And my responsibility to them is to identify for them the various types of remedies that are available in order to keep the wolf from the door. And just as a footnote on why people come to see me, I occasionally will get a gentleman coming to see me who has tax issues, but they're sort of dormant. But he's about to get married, and his fiancée has said, "You better clean up your tax problems, bucko, or we're not getting married." And so, therefore, I undertake to straighten that out for them as well. But essentially, it's people who are facing dire financial consequences if they don't deal with it.
Right. Otherwise, they're going to go see Carl instead. Correct.
That happens too.
So there's different ways to do this, right? I
Yes.
mean, you mentioned. So, what are the best ways to do
Yeah,
this?
the remedy that best suits a particular individual is a function of the relative strength or weakness of a current financial profile. There is a provision in place with both regard to the state and the IRS that both taxing agencies have to allow you sufficient monies each month to pay necessary living expenses in all those categories of living expenses that we all have: food, clothing, housing, transportation, medical, etc. And so I carefully examine the financial profile, also looking at equity and assets. And if it turns out that an individual is using up all of his income to pay necessary living expenses, and nothing is left over that could be devoted to the payment of back taxes, then he would be in a category of what the IRS calls currently not collectible. And what that means is they're not going to pursue him for collection, no levies, but the tax bill remains on the books and continues to accrue interest, and the IRS will revisit his financial status periodically to determine whether or not he's elevated his income to be able to make some sort of payment. Mm-hmm. And the context of currently not collectible is that when the IRS assesses a tax, they have 10 years to collect that tax. Okay. If it's not collected within those 10 years, subject to some certain exceptions, then the account is adjusted to zero by operation of law. And
wow.
so I've had a number of clients over the years who have fixed income, and they know nothing's going to change, and they just stay currently not collectible, and they let the clock tick in their favor until the 10 years is expired with regard to each tax period in question, and then it gets adjusted to zero and it goes away. That's a long-term prospect. Most of my clients want something a little bit more definitive or final.
Less stress.
Using the same concept of the financial profile, if someone has $5,000 of monthly gross income and they have $4,900 of expenses and current taxes on that income, that leaves $100 a month that's left over that could be devoted to the payment of back taxes. That would be the amount of the payment plan. And so I negotiate the resolution of the $100 a month. I have to verify all the finances, of course. And then the client just makes that payment each month. And if it's unpaid at the end of those 10 years, then the balance gets adjusted to zero. So payment plan is a very common remedy that we use.
Got it. That's great, though. I mean, I didn't even know that was available. You assume that taxes always come first. What if someone has actually other debt and then they also a tax bill? Is that other debt, say credit cards or whatever else?
Credit card debt is not considered a necessary living expense.
That's what I was curious. Interesting.
Yeah, and there are others that are not necessary. If you have a child in college and you're financing their college, that's not a necessary living expense. Mm-hmm. We're talking about the basics.
Got it.
Okay. So if the numbers are good, then we carefully examine offer and compromise for a client. And offer and compromise is the one that you see advertised all the time on late night TV. These companies from all over the country are hawking their wares in terms of being able to provide you with an offer and compromise. Many of these companies are subject to indictment by attorney generals all over the country because they're bogus. Mm-hmm. What they do is they take an unsuspecting taxpayer's money and they fill out some papers and then they abandon them. They're not looking to see whether or not there's any prospect of success for the offer and compromise. They're just saying...
Well, what is an offer and compromise?
Thank you for asking that. An offer and compromise is nothing more than a contract between the IRS and the taxpayer, whereby the IRS will agree to accept less than what's owed in full satisfaction of the tax bill. Okay. In order to evaluate whether or not the IRS will accept an offer and compromise, they evaluate what's called realizable collection potential, which is comprised of two elements. One is the extent of equity in assets that are owned, and the other is what they call future income or monthly cash flow, and it goes back to what we talked about with that $100.
Right.
And so, as an example, if someone had $5,000 in equity in whatever property, mm-hmm. and they had that same $5,000 income and $4,900 in expenses, with $100 a month left over each month, the IRS will multiply that $100 available figure by 12, which will generate a figure of $1,200. That's what they're going to assign as future income. Mm-hmm. To that, they'll add the $5,000 of the equity and assets, and that $6,200 figure is realizable collection potential, and that's what the IRS will accept in full satisfaction of the tax bill. Now, if the taxpayer owes $9,000, you don't really necessarily want to bother with it because there's lots of fees associated with my representing them. Mm-hmm. But if they owe $100,000 and I can settle it for $6,200, then the fee that they're gracious enough to pay me is worthwhile. And I view a fee that a client is again, gracious enough to pay me as an investment. And I view my responsibility to that client to give them a return on that investment. And I evaluate very carefully in advance as to whether that investment is going to be good for them. And if it's a bad investment, I decline to represent them. If it's a good investment, then I go forward with it.
That's very honest. It's very, very forthright of you to do that.
Yeah. And